Earlier this year, we discussed the so-called unicorn companies and speculation over whether the most popular of them would finally come to market in 2019. As we close out the first quarter, the answer appears to be, at least for some of them, yes. In this morning's U.S. Bank Economic 360, U.S. Bank Senior Vice President Mike Denneman joins Business Courier Market Engagement Director Kelly Snyder in the studio to talk about what this means for investors. Mike and Kelly.
Thanks, Peg. Mike, thanks so much for being here. I know a couple weeks ago we talked about unicorns.
Exactly.
So let's talk about that a little bit more.
Sure, yeah, just as a refresher, right? So the so-called unicorns are companies that they're startups, they're still privately owned, and they're worth $1 billion or more. So there's actually quite a few unicorns out there, but most of them, they fly under the radar. They just aren't household names. But there are some that we are all very familiar with. And with these popular unicorns, the question always is, when are they finally going to go public? In fact, we talked about it, just a few weeks ago. We jokingly said, was this going to be the year finally? Investors have been waiting forever to get a piece of these companies. And as Peg just said, we now know that at least for Lyft, the answer is yes. Their shares traded on Friday for the first time.
So Lyft did make a lot of headlines.
Oh, absolutely, yeah. They created quite a bit of buzz. I mean, if you're one of the big four that are still out there, Lyft, Uber, Airbnb, Pinterest, of those four, if you're the first to come to market like Lyft was, you're going to create all kinds of buzz. And certainly investors were enthusiastic, so much so that Lyft, when they were preparing during the week to come to market, they were able to increase the share price they were going to ask several times. So clearly, investors enthusiastic for it, understandably so. They've been waiting a long time to get a piece of these companies. But that also kind of sets the stage for the next round. We now know that Pinterest has just filed the paperwork for their own offering. They're planning to come to market, it looks like mid-April. So here for years, investors have been waiting for these four, and then in the span of just a couple weeks, we've got two of them that are going to come to market.
Sure. So what should investors be doing around these hot IPOs?
Well, that's a very good question. You hear this in the news and you see it and you wonder, maybe is this something that I should be getting in on? So I think there's maybe a couple of things to keep in mind. One is that, like any hot IPO, most of the increase in price is due to that buzz and to that hype.
Sure.
It's simple supply and demand. There's only so many shares to go around. If everybody's chasing after them, that price is going to go higher. But oftentimes what you'll see is that once that excitement dies down a little bit, the share price will come back to earth some. So a patient investor who can just kind of sit back, let the excitement die down, oftentimes can get the shares at a more reasonable price than they could right at the beginning. And then one very important thing to note is that these are popular companies. We're all very familiar with their products, but most of them still are not profitable. They don't earn any money. And so from an investment standpoint, that's going to be pretty important, right? So if you are interested in one of these, just make sure that you look into what it is that you're actually buying. These are cool companies, these are hot stocks, but in investing, the financials, they really matter. There's more to a stock than just the name. So keep that in mind.
Good. Well, great information. Well, thanks again. And